All right. Weekly outlook. Monday, January 27th, and we're in the final week of January. And what a month has it been already with the 0 to 1 million challenge, 2025 mentorship, and now we're gonna prepare for the next week. Again, I share all my trades and ideas in the Telegram, in the school group, so make sure you are in the Telegram. I'll leave the link somewhere here around this video. And let's go over Forex Factory first, the news from this week. It's very important that we know what's going to happen because we need to plan accordingly for this week. And it's going to be a banger. It's going to be very big. We have first, like Monday is nothing. Today, slow news day. But tomorrow we have AUD, CPI, 1-3 big boys, CPI, FOMC, NFP. Those are the three biggest news reports. So you need to be aware of those when those happens because the market will move around those reports in the week. And then on Wednesday, it's big. We have first CAD rates, interest rates. It's 1-3 big boys in the AM session, New York AM, and then in the New York PM session, we have the USD rates. So for CAD and USD, the market will move crazy this week. So we're gonna plan accordingly, but no, the biggest volatility driver will be the rate decision, both on CAD and USD on Wednesday. Thursday, Euro rates, so also a big one. Then USD red folders. And on Friday, we have some smaller red folders for Euro, CAD, and USD. But the biggest ones are CPIs from AUD and the rates from CAD, USD, and Euro. So with that in mind, we know that Wednesday is going to be the biggest day of the week for CAD and USD, and for the Euro it's going to be Thursday. So that means earlier in the week, you can maybe position yourself for a swing position if price aligns, but it's going to be very humble, very slow engagement for me personally, start of the week. I'm not going to chase too many trades because I know the majority of the good trades will be closer or after those news events. And yes, we will take some trades. We will pass some challenges, hopefully, to continue the 0 to 1 million challenge. But that's my expectations. And the market opened today, like on Sunday open, boom. Indices, crypto, all down. So we're going to discuss that in this weekly outlook as well. But first, DXY, the dollar. The dollar, when we opened today, this was the London session, we just moved away big time. And now in the higher time frame, let's zoom out a little bit. Now in the higher time frame, we are approaching that weekly bearish order block. We tapped already last week, but now we are going to test it. So I'm going to wait for what are we going to do in this order block. Are we going to set a low in this order block? So that means towards Wednesday, USD news, we're going to go down and then we're going to go up. Or we're just going to chill around for today and for tomorrow. So now we have the big down move. And maybe we tap it a little bit, but we don't move away too aggressively. And just at Wednesday, we're just going to sell off. Those are basically the two scenarios. And the weekly order block is going to be the point of interest for this week, where I'm going to take my trades around. I'm going to check if there's reactions from that level. And what I do in the order block, I like to see the bodies close in the upper 50% of the body. So the body from high to low, let's do the 50%, so right here. So this area, from the body towards 50% is going to be my point of interest. So I'm going to leave it there, not too prominent, there we go. It's going to be the point of interest. So for today, intraday, 4-hour SIBI, maybe some New York trades to take shorts on DXY. That means longs on the USD pairs, inverse correlate. But again, I don't expect too much from the USD pairs with rates coming up. So that's DXY. DXY point of interest, weekly busy. I think we can go higher, back higher from there. But if we have on Wednesday the rate cuts, to give you a little small sidestep here about the rate cuts, the FOMC from Wednesday. The FOMC from Wednesday predicted is that we are not going to change any rates. The rates are going to stay the same. But what if I see Trump saying this on the news. Trump wants to have rate cuts, like very aggressive rate cuts, because it's good for the economy. And when the expected is no change in rates, but we are going to change rates surprisingly, basically, like without people are aware of that, that is when the dollar goes down. So that's why maybe already it's going to be priced in that we're going to go lower. But that's how you can use the fundamental side, the new side in your trading this week. So expected is no change, so it's going to stay the same. But a rate cut, so a lowering of rates, is bearish for a currency, so bearish for the DXY. And I don't want a surprise rate cut, so I'm not going to gamble that. Only if the structure is very clean. So what I mean by that, maybe during the week you already know we're probably not going to respect this order block, which is going down and down. Sure, that's going to be priced in. I'm going to take some longs on the USD pair, shorts on the DXY. But for now, it's just a waiting game. And follow the arrays. So follow the premium arrays. Follow the bearish value gaps. Follow the bearish order blocks. And see from what point they stop holding. And we're going to respect this kind of arrays and maybe go up. So with that in mind, we're not sure around the weekly order block. I'm probably sitting on the sidelines with the USD pairs. Then JPY thought I would wake up with also massive movement. So JPY had a rate decision last week. And now we opened with a massive green candle. And this can potentially continue the bullish price action the bullish structure we already were forming. So we have this liquidity sweep down here at January 7th. Then we broke structure with the displacement up here. And then we touched this daily bullish for value gap and order block 2 times right now. So let's zoom in a little bit. This one, touch the order block. This is the order block, the down close candle that swept the low. And now we're going up again. So later in the week, and maybe potentially already today, I'm going to test, are we respecting discount arrays? So that means a discount array is a bullish order block, bullish value gap, bullish arrays, bullish breaker on the lower time frame. If that does happen today or tomorrow, then the rest of the week, I'm going to long the JPY basket. And the JPY basket works the same as the DXY. So when the JPY basket goes up, the JPY crosses, goes down. Just like when DXY goes up, the USD pairs go down. Inverse correlated. So that's why the JPY pairs are on the list for potential short ideas based on the up move from JPY already. So with this move, there is no need to FOMO. Just wait. Maybe we're going to set a high of the week already and we're just going to tank down. You don't know. Just wait for the first test of premium and discount arrays. And there's where the easy trades are. When you're, okay, the first array is already tested. And from that point, you are continuing. I see that I don't have gold on my list. I prepared gold, so it's going to be on the list because we're going to trade it. Cool. AUD NCD is just for relative strength. Nothing major here. We see the euro is still stronger against the pound. And this is where you wake up to when you're watching this as a New York citizen or US citizen. You wake up to a massive red market. This started literally open with a gap to the downside. And we could potentially see some lower prices. We have an S&P at the highs here with ES. Let me show you how that looks like. Let me drop to the 4-hour. The SMT is on this high, on the December 25th high. We did not take this out on NASDAQ, but we did take it out here on ES. So an SMT at the highs could mean lower prices. And similar, if you have a big move, yes, you're not in this, who cares? Now it's just going to be a waiting game. Are we going to retrace and go lower again? Or it was just a liquidity grab. Maybe we're going to take out some lows here. So also maybe potential SMT at the lows here. And that's just the waiting games. Also for NASDAQ for today, wait a little bit, be cautious, no need to chase trades. The market will show its hand, definitely closer towards Wednesday. What I personally think, that has to do with how ES is moving, the ES, the S&P 500. I want to see how we close in this daily bullish for value gap. And where my eyes then are going is the January 13th low. We potentially could make an SMT there with NASDAQ. So let's say hypothetically, ES just touched this and goes up. Then NASDAQ, what NASDAQ could do, if we look back at the January 13 low, this one, that NASDAQ sweeps this today or tomorrow as an SMT and then goes up. Could be a play. So that's what I'm eyeing for. But before I entering on the USD pairs, I'm gonna need more information. So that's for the NASDAQ and ES. Big down move. How we went down is very aggressive. So let's see. And again, just test, are there premium raise respected, bearish or value gaps to go lower? Well, there we have the answer. Then the YM, the Dow Jones, is also on the list. The Dow Jones is making a beautiful market maker buy model right here. So I have a smart money reversal right there, break of structure, for value gap 1, for value gap 2, and now we're in a third for value gap with, again, failure swings, the staircase effect. If all this information goes a little over your head, feels overwhelming, or you're not sure where I'm talking about, in the school group and also on YouTube, there's a market mastery course where I go from A to Z on every basic concept I teach, the ICT concepts, but then without all the rents. Definitely go to school, classroom, market mastery course, and follow the 2024 and then now going on the 2025 mentorship, all free on YouTube. That will help you understand more what I'm doing. So if this goes too fast, go there. There's your focus point while you wait basically for the rate decisions to happen this week. So from this point here, back at the 4-hour market maker model, I'm curious, what do we do inside this area? We are now in a 4-hour bullish for value gap. Do we use that to go up again? Or just gonna respect it, or just gonna disrespect it and use as a inverse for value gap to go lower? Again, you don't know that right now. Time of recording is around 7-ish, 7 a.m. EST, 6:30. So we're gonna have New York session. The open is gonna be very interesting. And we're gonna do live trading together as well on Monday, New York session, and Tuesday and Thursdays we're gonna do London together. But this is a point of interest, this area. So curious to potentially catch some longs later today. But if we don't move away from it, we're probably gonna continue shorting. So let's see. Then the USD pairs. Remember, the DXY is going to go down towards that order block area. That means the USD pairs short term are going to go up. So neutral bias, just like I have on DXY. I think USD pairs will go up as long as DXY continues that down move. So if you want to short term like intraday trades, I would go for longs. You have a higher time structure long supporting your ideas. So definitely do that. I think GU looks the best for short-term trades. That's what I'm going to look at on today already. On the 4-hour, we have a very nice 4-hour structure. And with also some clear highs there. We are currently in a bearish value gap right here. So what I'm curious at during New York session is if we can tap into this to set a low to session and then long towards here, also towards that order block area on DXY. So this is going to be a trade idea I'm looking at. But if we close lower than this for value gap, this idea is of course bullshit. So maybe you notice how cautious I am early in the week to take a lot of trades. But I think GU could potentially be a nice trade idea. So that means on lower time frame, you wait for a retracement towards, for example, this 15 minutes busy, looks pretty nice, to go long there on the lower time frame. We have a nice London low of the day currently, so this could be a nice trade idea. And while I'm examining this together with you guys, we have an overlapping 1-hour busy. Also 4-hour busy, same area, so 1 and 4-hour busy. And inside that 1 and 4-hour busy, we have also on the 15-minute, a 15-minute busy. So this area and price is very nice to trade from. So during your session, here is where you need to be ready to look for your lower time from entry model. So here is where your IFT 2022 model or your school model or whatever favorite lower time from entry model you have, there is where you put it in. Because here you have a 4-hour structure, you have a daily and weekly structure, all bullish. Everything's bullish there. And there you can just wait for price early New York to come down there. And then you wait lower time for the market structure shift. And right here, somewhere here, is where you could take your entries and then ride it towards the highs. And when you get I'm gonna do this. This is what I'm gonna play. Worst case scenario, this idea doesn't hold, and that 4-hour bullish value gap doesn't hold, and you take a -1. There's where you have stop loss, and we maybe just go lower from there. I'm fine. I'm willing to take this trade if it aligns. And it doesn't mean take a blind trade inside this 1 and 4-hour busy. No. It's going to be waiting on the lower time for structure to then go higher. Cool. Then GBP NCD, and you're like, NCD, that's a long time. I agree, but we have some reaction from this weekly bullish fair value gap. And we have a weekly bearish fair value gap coming up here as a point of interest. So potentially I want to long towards that area. And where I want to long from, it's going to be from here. So there's a low probability play. I think NCD is one of the worst pairs currently to trade. But we have a monthly bullish fair value gap coming up here. Let me put it out here. Monthly bearish fair value gap right here. Small one. With now a weekly bullish fair value gap respected. So we could see longs towards that monthly as a swing. But short term, I want to maybe long there. So at least to the weekly SIBI, and then maybe also just take some more entries as a market maker buy model. So we're gonna long towards there, retrace towards an order block, and then just continue to the monthly bearish value gap. That would be something I would be interested in. But first things first, we need to see some structure forms later this week. I'm going to look at this when the area hits. We have a small one here already. So let's see, but put it on the list. Then 2 CAT pairs. We have CAT rates. I have a mental note here. Potentially wait this week out because after this week, we create a potential weekly bullish fair value gap. And that is definitely something I would be longing from. So maybe not this week, but maybe the week after. So next week, we can play this. So I have it on my list. I'm gonna see what rates do, but this is definitely something I'll be interested in to trade later in the week or maybe next week. Same for GCAT. Creating a weekly bullish fair value gap. But I'm also going to already be interested in looking for potential longs right here if it presents today or tomorrow or Wednesday. Sorry, not today because the daily business needs to be formed. But it's on the list. I'm gonna take a look at it. Then the JPY. Remember, the buy structure on JPY means shorts on the JPY crosses. I picked 3, which looked the nicest. Here, mental note, the weekly SIBI is tagged here. Then we are now creating structure on the daily. So we tap it, displays lower, creating a daily bearish fair value gap. And now we displace from the daily bearish value gap again. So sell structure is coming in. And from that point for today already, going to look, okay, are we going to respect premium arrays to go lower? Where to? I would say these lows look pretty cool. Let's see in the higher time frame, is there a higher time frame for value gap somewhere? Yes, there's a small right here, could be a nice one. And also on the weekly, we have a weekly bullish fair value gap right here. So that could be an intraday short idea. So that means lower time frame. If you want a lower time frame, is during the New York session. See if you can get a retracement, and then try to short towards the weekly busy. It's going to be my play for USD/JPY, and this aligns, guys, with the JPY idea, with the DXY idea that we're going lower. So we're going to do this inside the order block, And also with the GU idea, that price first, that the DXY goes lower, again, the dollar goes lower, and then GU will go higher towards this. So the GU and the USD-JPY trade are basically the same trade idea, based on the DXY and USD-JPY also on the JPY. Then GBP-JPY, so the pound, we reacted from this daily bearish fair value gap, and on the 1 hour, create structure. So we moved away, displaced away, and this 1 hour CB is definitely respected here today, and then we moved away today already. So I'm going to look for a potential retracement towards this area. And why this area? A few reasons. If you're an ICT nerd like me, what this area is premium of the range. Here it comes, the whole ICT 9 yards. Here it comes. Premium of the range, OTE area, fair value gap in premium. We have an order block, bearish order block. We have inversion fair value gaps, balanced price range right there. A lot going on in that area. So I don't want to bore you with all the ICT stuff, but if there are many confluences stacking up on top of each other in the same area, and hypothetically we're going to keep these lows intact, which are definitely sell-side liquidity targets, then this is going to be a very easy trade for today, for later today or tomorrow for GBP-JPY shorts. I don't want to go too deep into lower time frame on a weekly outlook, but this is all based on a daily level. Daily level to go lower with JPY potentially going higher. And then lower time frame, or lower time, it's the hourly. So in the hourly, if you're going to here, then you can drop to the 5 and 15 minute to insert your favorite entry model. CAD JPY, similar as GBP-JPY, daily level, 1 hour structure. So what I see here, we took liquidity up here. Then we displaced lower, creating fair value gap 1 on the 1 hour. Then we displaced lower again. Oh, so nice. It's like art. This is a market maker model. And then towards the lows. It's already tagged here. I don't like that. Because this was actually the trade for London today. I don't trade Monday London. This was the first trade based on this idea. But during the New York session, we have a 4 hour CB, what we can use as a point of interest to potentially go lower again, based on a higher JPY idea. So JPY can do this, and then CAD JPY can do this. JPY shorts. That's the the red line in this rand. Cool. Then gold. Gold, the star player of the challenge so far. I took many trades on gold, and there's one mental note. I am looking for potential shorts forming somewhere, maybe around the rate decisions this week, first week of February, after or before all-time high. I don't know. But to just share what I'm looking at now is we have this daily bearish fair value gap where we topped on Friday. But now it looks like we're just going to continue where we left off. We are moving away from a daily bullish fair value gap here on Thursday. And from that daily bullish fair value gap, let's see on the 4 hour. I think the 1 hour structure is better here. It's a little crowded. Usually I have very clean charts, but I took so many trades on gold. It's pretty crowded here, but it's all still respecting this counter race. So for today, during stream, 9 a.m. EST, around 9 a.m., I'm going to look for longs inside this area towards somewhere here the highs. I don't need all-time high, just somewhere here the highs is fine. The only idea that's bearish here potentially is going to be respecting of this gap here, the 4 hour gap, the volume imbalance, where we are in right now. So if we disrespect that, so we close over that in the coming 2 hours, and the coming 2 hours is into New York session, this can be a very easy trade on gold longs. And if it doesn't form and we just displace lower during today, so we're just doing this, then the rest of the week I'm going to look for shorts. but I'm gonna keep longing until I get stopped out, until the structure breaks on the higher time frame. And with higher time from here, I mean the 1 hour. If I have a 1 hour break of structure, which we didn't have yet, a little bit right here during these swing lows, but with a all-time high loading there, I'm not too convinced about this down move. But again, I think today already will give us the answers if we're gonna go down or up. And I'm willing to put this trade into action. So for today, gold, JPY shorts, potential GU long. The indices, potentially YM from this 4 hour busy, but I don't like the indices too much for now, early in the week. So let's see later. Then if you're a crypto holder, investor, trader, I don't day trade crypto, but I like crypto. The whole space, little higher time from analysis. What I think the market could do, I think point of interest for Bitcoin is 95K, the daily busy. On a weekly, obviously we could drop lower into these weekly busies. That's like the 70, 80 areas. My point of interest, and it's similar to, remember the SMT example I gave you earlier in the stream with ES and NASDAQ? We can do the same with Ethereum and Bitcoin. And the point of interest there is the January 13, just like the indices, January 13 low. With the current price action, I think Ethereum can take this low into the bullish for value gaps here. We have 2 on the daily. Let's make it the big one right here. Two bullish for value gaps. And Bitcoin doesn't need to go there. Bitcoin goes higher from, so you have an SMT there. It looks exactly like the NASDAQ ES example, but then on Bitcoin and Ethereum. This is something I'll be looking at for today. So the Monday 13th of January lows are very significant for the SMT purposes. So let's see how it plays out this week. If we both take out January 13 low, again, I think for the crypto, for the Bitcoin, I think we can go around the 80s in the weekly busies. So let's see. That's my crypto prediction. If you're holding crypto, guys, don't panic. We have a bull run coming up, or is already in the bull run, but don't lose all your money in crypto. I think you know better than that. So keep that in mind. And yeah, that's it for the weekly outlook. So lots to discuss. Very exciting week. 0 to 1 million challenge. Current status is 300K. So we are 30% towards the goal. We have all the trades shared in the Telegram. All my ID shared in Telegram. Market Mastery course, 2025 mentorship, all free content, all value where you can learn from to do this too, make money. So you get funded, you have the knowledge, everything you need. I'm also opening a few spots for my mentorship. Already some invites are out. So if you want to get mentored by me, send me a DM on school or send me somewhere DM, and I will share some as well. If you like this video, you watch on YouTube, subscribe, like, comment what your favorite pair is. Really appreciate it, everyone, and looking forward to today's stream, 9 a.m. EST, London, Tuesday and Thursday. That's all I have for today. So have a great rest of your trading day, trading week, and I'll see you later. Bye-bye.